let's talk about two AI companies, two AI stocks, or at least that's what we think they are. AI companies, AI stocks. One is called Big Bear AI. The other one is called C3 AI with the best ticker symbol on the planet, AI. Now, C3 AI, we have already covered on this channel a couple of times. You know that previously it was called something else. Follow the trend, change your name along the way. Big Bear AI, as I've said previously, this is just an update video by the way, but as I said previously, stay far away from such names. Now, let's start off with company number one, which I think should be respected way more than Big Bear AI. So that's C3 AI. Market cap $3.4 billion, year to date down 5.2%, year over year down 30%, in the last 3 years down 54%. Currently, it trades at 7.1 times EV to sales in the next 12 months. The current analyst estimate for sales growth in the next coming fiscal years is on average for the next 2 fiscal years 21-23%, and then in fiscal year 2027 17% growth with EPS turning positive. Right now, the average analyst price target sits 6.37% higher than the price we're at today. Now, overall, you could say that yes, revenue has grown, hasn't grown extremely fast, but it has grown over the last couple of years. And free cash flow, although it's still negative, we can see that it is trending in the right direction. This is in the last 12 months. If we look at gross profit, it's green, but has not been growing that much at all more recently. If we look at net income, that has become worse than before. And then SBC as a percentage of revenue, close to 70%. And yes, it has come down. It has come down from the close to 80% it was, but it has been plateauing now for a little bit, extremely high. And so let's dig a little bit deeper. Let's look at what they recently reported. Before doing so, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with a couple of comments here. We finished a strong quarter and closed out a huge year for C3 AI. This was our 5th consecutive quarter of accelerating revenue growth. Our 4th quarter revenue grew by 20% year over year, exceeding top end of our guidance. Our full year revenue grew by 16% to $310.6 million, also exceeding the top end of our guidance. Demand for enterprise AI is intensifying, and our first to market advantage in enterprise AI positions us well to capitalize on it. Our enterprise AI applications have been adopted across 19 industries, underscoring increasing market diversity. Our federal revenue grew by more than 100% for the year. The interest we are seeing in generative AI application is staggering. All great comments. And so it is true if we look at revenue growth that has been accelerating quarter after quarter. We went from 0 to 11 to 17 to 18 to now 20% year over year growth. So that's great to see. Now, the problem with this, or at least that's my problem with this, is that if we look at what might happen in the future, how can we do that? Well, if we look at RPO, remaining performance obligation, we can see that it has been decreasing since Q4 of fiscal year 2022. And the lower this goes without a little rebound, well, you know that in the future you will not be seeing a reacceleration in growth or continued growth with regards to revenue growth. Now, they've been talking about partnerships, pilots, and all of that. Fine. But why is RPO constantly coming down quarter after quarter? Something doesn't make sense here. Then if we look at the deals, this year we're down year over year and actually quarter over quarter as well. Then looking at the overall business. So we know that revenue grew 19-20% or so year over year. But cost of revenue increased 40% year over year. OPEX is up just 10% year over year, and net income, a loss, has increased by 12%. So although we hear nice comments, although we hear them talk about more agreements, diversity in the industries, etc., that's all fine. Revenue is up 19-20%, and I even believe they reported free cash flow this quarter. But, I mean, if you're growing 20%, but your cost of revenue increased 40%, that's not that sustainable. Plus, as I've said before, RPO not increasing but decreasing since fiscal year 2022 is also, in my opinion, an orange flag. Moving on to guidance, they expect next quarter revenue to come between $84 to $89 million, representing growth between 16 to 23%. Of course, to continue the trend that we're seeing, we should be growing above 20%. With regards to revenue for fiscal year 2025, to grow between 19 to 27%, so quite a wider range. Of course, that will be updated in the coming quarters. And so if we look at the graph right now, we still have this downtrend that it tried to go over but got rejected already 3 times. Currently, the stock sits at $27.21. The 200-day moving average sits at $27.11, the 50-day one at $27.09, and the 20-day one $28.63. RSI is pretty neutral. There is some negative momentum. So that was C3AI. Of course, there are some positives, but I think the negatives right now outweigh the positives. You want to see continued growth, but you also want to see some improvements in RPO, since that is telling you what might happen in the future. Moving on to Big Bear AI. Has a market cap of $317.44 million. So yes, an extremely small company. Right now, one share will cost you $1.29. In the past 2.5 years or so, the stock is down 86.8%. Over the last year, the stock is down closer to 50%. Year to date, the stock is down 40%. If you want to look, if you care about the valuation here, EV to sales 2.2 times in the next 12 months. Some analysts expect this company to grow sales by 28.2% in fiscal year 2024, followed by 12.8% in fiscal year 2025, and then 6.9% in fiscal year 2026. There are 5 analysts covering this company, and look at this. The average analyst price target sits 181% higher where the price we're at today. It's at $3.63. Okay, quite remarkable. Anyways, this is what happened last quarter. So cash balance of $81.4 million. They reaffirmed full year 2024 revenue guidance of $195 to $215 million. Now for that quarter, revenue decreased 21.4% to $33.1 million. They also experienced delays in contract awards due to the continuing resolutions. They say here that the year-over-year decrease was primarily driven by the planned wind down of the Air Force EPASS program in mid-2023, $6.8 million, and the elimination of revenue from Virgin Orbit due to their bankruptcy announcement. Okay. Then gross margin of 21.1% for the first quarter, a decrease from 24.2%. And so you're basically getting this picture right here. There's also a one-time goodwill impairment charge, which of course increased operational loss and net loss as well by quite a lot. Again, this is goodwill impairment, should not happen each and every quarter, but still, it would still be at a loss. Plus, revenue decelerated, might not be their fault, but it just also shows you that there's not a lot of customers, there's not a lot of revenue coming in inside that company. And so right now, if we look at the stock, well, it had a huge run-up when at the start of the year, everything that was related to AI got a huge pump because of, well, meme stocks and just market craziness. So it went up 191%. Since then, the stock is down 73.32%, now at $1.29. I don't think the 200-day moving averages here make a lot of sense to look at because, to be honest, like I said in the previous video, I only cover this because a lot of you have asked about it. So here's a quick update. I don't think this should be an investable company. That's just my opinion. It might go up because of, well, meme strategies or whatnot, but overall, I would definitely recommend to stay away from it. So why do I cover these companies? Well, I don't actually cover this company. I only do these videos when a lot of you are asking about an update. Since I covered this once, this is the second time and probably the last time I will cover Big Bear AI. C3AI is a bit more interesting, a bit more stable as well. So that one we will keep covering on this channel. I definitely prefer C3AI over Big Bear AI, but I also think that there are plenty of other companies out there that are better than C3AI or C3 whatever they're going to get called in the future. So that's about it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.